Hey guys, so in this video we are going to go over key zones and how to draw them properly. So starting with Euro USD on the monthly, we want to see if there's any major levels where price has rejected or price has supported. So that's what you are looking out for. So for example, we don't want to do, like I said, when I've talked about in the videos, we don't want to do like all these lines like everywhere where the market rejected, okay? We just want to do the major ones. So what you can do is take the rectangle tool, and we'll just do a different color since I always use green. Okay, so just by looking at this, we can see that there's a level here, okay? So you can just mark that. And when you're looking at rounding price, you just take the horizontal ray tool, go to the line chart, and mark up the points. Okay, so go to the candlestick chart, and it's reading you 57,902. Okay, so let's try to round that to 58 even and see what we get. Okay, so this works. So right here we can see that price closed below the 158 exhaust, and again this is on the monthly, right? So it's 1 2 3 4, this happened in 5 months. So we can see that price ended up, the candlestick bodies ended up closing below 158. Okay, so this is one of our levels. Okay, so 158 is a major resistance level. And again, with here, this rejected. Okay, so 138,782 rounded to 800. Okay, so the candlestick bodies closed below this price, so that's another one. And then if you look left, you can see how it all lines up. Oops. Okay. So another level we have is right here. You can round this to 800 as well. Let's just see. If it's cutting the candlestick body, you have to go lower. So in this case, it is cutting, so we have to go to 750. Still not enough. 700. So I like to go even, 25, 50, 75, back to even. Still cutting that candle. Let's just see. Okay, so 300. There we go. So again, for support, I like to change the color. Okay. And then here as well. let's bring this a little closer. Again, guys, this is on the monthly, so. Okay, so these are like the most major ones on the monthly time frame. Like, yes, we have support here, we have support here, we have a rejection here, so on and so on, but these are the most obvious ones that we can see. Okay, so that's how you draw out these key zones, and you always want to make sure you round them. So for here we can see that we have, so right now we're coming up to resistance, because if you look here and take the horizontal ray tool, you can see that price, price rejected the 1.19, then came up, rejected it again, closed above, tested it, then came up, tried to fake out, then went above, tested once more, tested here, broke, went to 124.2, and then now it's coming up to that 119. So this is a major zone. So the more times price tests a zone, the more valuable it is. So that's what's happening right now. So again, even if we were at this support here, we can just extend it and see what's happening. Okay, so price tested twice, broke, tested, then successful break, then came up, tested this level, then went up, tested, then tested once more, and then now it's correcting from that level. So that's all you're doing. Like I said, you don't have to mark up every level, especially like I'm just pointing out where you put the levels, but you always want to stick to current price, right? So that's how you mark up the monthly levels. So since price is close to the 1.19, all of these others are irrelevant. What I actually do with pairs is I write down Euro USD monthly, and I can write down the key levels in my notebook. So then that way when price gets to there, like if it gets to 124, 138.8 or whatever, then I know, okay, it's coming up to a major key level. So then I just go and delete them. And then weekly is the same exact thing, except it's more candles, obviously. Daily looks like this. Okay, so this has been in an uptrend for quite some time now. Can it go to 1.19? Yes, for sure, because it's bullish on higher time frames. It does need a correction though, so that's kind of what we're watching for here. But here was a major key level. Maybe 2, yeah, perfect. So 1.1400, so what ended up happening is it just went through. So it needs to eventually come down and test structure, because this is a major level on the daily. Okay, so it's really easy to identify once you keep practicing. Like I can just literally see that there was support right here. And like I said, all you do is take the horizontal ray tool, go to the line chart, and mark up the points, and then round it. That's it. Okay, so let's do another chart. Okay, so the most obvious is this. That's cutting the candles, so we're gonna go to 200. Perfect. Okay, so around 94, 294 for this one. And then we have major rejection in here as well. And then right here. So price actually tried to fake out and then respected. And then of course price rejected up here, so okay, so that's for the monthly on USD CAD. Still in an uptrend. So what ended up happening is it tried to break above the 1.40 and then came up, tested this liquidity wick, and then came down, closed below, and then now this is just a correction phase for now. Okay, so it's the exact same thing. So when you're drawing it on H4, you just want to look at current price and mark up where the market supported, where it rejected from the top. So all you're doing is looking at top and bottom. So for example here. Okay, and then to get that exact key level, mark up the points, go to the line, go to the candlestick chart, round it. That's a little bit too close. 850. Perfect. So 86, 850, and then same with this, so on and so on. Okay. So if you do this, this is so easy because then you can take the entries off these certain prices. So that 136, 850, and then around here. So price tried to break out in this area. Okay, so price tried to break out, failed, then came below. So it tested 1, 2, 3, 4, 5, 6. Okay, so again, let's take a short position at the 136, 850. We'll do a 30 pip stop. So what ends up happening is it breaks structure and comes down, makes catches minor support, then comes up and tests, then continues down, tests one more time, and then continues down to major support. And if you look left, all you do is bring it down. So then what ends up happening, so that's a 1 to 6, you're risking 30 pips to almost make 200 pips. Okay, so 190. So then what happens is you see support right here, and if you want, there's a couple things you can do. So you can extend your target, or you can also take it from this zone. So around 136, 200, you can just go like this, enter 6200, stop loss. You can do 20 pips, and then your target is the same thing. It's around here, okay? So if you, so you can take one entry, or you can take two, or you can take a couple at that entry. Like, it's totally up to you and whatever you want to do with your trading plan and how many pips you want to catch each week. So for this is a 1 to 6. For this is also 1 to 6. So this one was 190 pips and 124. Okay, so over 300 pips just by doing an entry here and then entry on the retest, and this is the target because we have major support right here. So that what ends up happening is it tests support and then goes back up. So when you're counter trend trading, it just means you're following the trend, but you can also take the opposite position when you're at a certain support. So let's say you took a buy at this level and then took it back up to that previous resistance. That's again 124 pips. So you take it to this target. So you just take it to the same target, okay? So that would be 124 pips. So what ends up happening is it ends up not breaking this structure, so it exhausts and then comes back down. So when you're looking at your targets, you're just going from zone to zone. So your entry's here, your first target is here where it tested this broken broken support right here, because this is one support, now it comes resistance. So if this were end up to break, your target would be up here. Okay, so that was 124 pips. So again, it rejects. We do another short. And then again, this is on the 4-hour time frame, so you can break it down to see exactly what's happening here. Okay, so price tried to break, failed to break, came down with a bearish candle and tested. So your entry could be right here, spot on. So even if you took it at the 200, and then your target would be around here. Okay, so looking at the 4-hour, what ended up happening is it came down, then came up for a correction, and then rejected again. So you can also take an entry at that pullback. And I mean, guys, you can make your stop losses tighter if you want, but I always leave mine like 30 to 40 pips, depending on like what time frame you're entering on. So I like a wider stop loss just because I don't like getting stopped out, but that's totally up to you. So our first entry was here, and our first target's here to the next structure. So what ends up happening is you can keep this target, but if you see that it's reversing, like sometimes you freak out, but you just gotta watch how price is responding, because as long as you're break even, it's fine. It's not a loss, right? So if price were to test this once more, then you could either just there's a couple of things you can do. So you can take profit when it gets near here and you start to see a reversal, or you can just let it, or you can just be patient and let it see if it gets to that structure. So let's say we took an entry here to here, which is 122 pips. Then it pulls back and exhausts, so it has many wicks and then a reversal candle. So this to here is 89 pips, but what ends up happening is it comes down and breaks structure. So then you're looking at the left and you're seeing, okay, well, price rejected in this area. Okay, so what ends up happening is we're going to move our target to here. So if you kept this original entry, all you're doing is moving it to the next target. So just by that, you got 245 pips. This one you got 210. Your week's done, honestly. Some people want to catch 200 pips a week. If you're catching like 500 pips a week, you don't have to trade next week if you don't want to. Like, if you're catching these trades off these major zones, just take as many pairs as you can, but just focus on the swing trading. Like, just focus on holding them longer, because then throughout the week, if it's not a good week and it's just ranging, you don't have to trade because you caught these long trades. Okay? So that's how you do it. Let's go to GJ. So same thing with GJ. Monthly. I'm not going to go over a monthly because you guys don't have to do it. Again, it's just major key zones on the monthly. But let's do the 4 hour. Okay, so support here. Rounding it to 350 from 347. Okay, so some of the candle bodies are going to get caught, obviously. We're looking at where price rejected, right? So this respected, then broke, tested, came back down, broke, then kind of ranged around this area, and then closed below. That's all that means. Okay, so then again, at this level, we have support. So again, when you're taking these buys off these levels, they're big amounts of pips. Like from here, 271 pips. From here, almost 200. From here, 213. So on and so on. So they're really, really good levels. So you just have to focus on that. Okay, let's go to NZD USD. So the more you practice this, the more you're going to get good at it. So all it comes down to with trading is practice, practice, practice. Okay, so this is a major level. So what ends up happening here is it double tops at this level. So drops, catches support right here. Okay, so I tried to fake out, then closed above, came up, then tested the support. Okay, so from here, came up, tested this again. Wasn't enough bearish momentum, so came up, closed above, tested right at that 61.5, and then went up. So just at this 161.5, 415 pips. Okay, and then what ends up happening again, makes an M pattern, double top. Horizontal ray, line chart. Just to get that exact price, that's all it is. $621, $350. Oops. Okay. So again, guys, like just from these zones, you can also watch out for patterns, which I'll get in the next video as well. So here's a M pattern. After the M pattern, it reversed, always. Turns into a W pattern, and then reverses. Okay, we'll do one more pair. And if you guys want to scalp and you want to trade on lower time frames, it's the same exact thing. You're just plotting out the zones and watching it go from level to level on depending on the time session you're looking at. But it's the same thing on every time frame. It's just better to look at higher time frames and then to take the entry off 30-minute or 15. But if you just want to focus on 15-minute or 30, it's the same exact concept. Okay, so we have a level at 126.250. So price tried to break, then wicked, closed below, and then dropped. So just from, let's say you had a stop, or let's say you had a target of 100 pips. Just from this, it's 534 pips. Just from this entry. Okay, and then let's just look left here. So what ends up happening, tests it, doesn't have enough bearish momentum, so completely breaks through, tests once, tests twice, breaks, tests, drops. Like it's this level is really, really important, and so that's what you kind of have to watch out for. So there wasn't enough bullish momentum here, so then it closes below, drops even further. Okay, so this is also an easy buy. You have major support here, price is not breaking. Okay, so what ends up happening comes down to here, ranges, but the candlestick bodies are closed above this price. So that means it is supporting. So what ends up happening is it starts to reverse from this downtrend. Okay, and then it also makes a W pattern. Okay, so I think you guys get the point. If you have any questions about this, let me know. For homework, again, make sure you have the Pro or Pro Plus plan. You can upgrade if you want. It can be off any time frames, to be honest. Let's try and do 1 hour and above.